And we're going to get the show on the road. Now, I prepared this into just 3 slides, this welcome slide. I'm going to start doing these kind of sessions every Wednesday from now on. And each time I'm going to cover different topics. For today, I've prepared 4 different points. So I'm not going to go over this here. The point of these sessions is purely to help you guys evolve and become better. I noticed that many of you are chasing your trades. Many people are buying tops and selling bottoms, and the market, of course, reverses on you and you hit a stop loss. What I would like to do is give you a small example of a market move that happened recently. Just give me a sec, like this. Okay, so I'll give you an example here. I think you guys are going to be able to see this. Do you see the snipping tool?
Mm-hmm.
Yeah.
Okay, cool. So I see many people do this. The market hits a top, market starts going down, and people start shooting in sells here. Okay, 1, 2, or even a couple of you guys do 3, 4 at once. Point being, you know, there is no hook, there is nothing here happening, there is no valid criteria to actually execute a short. And what happens is you're waiting, the market hits this level here, stops you out of your short, and then the person decides to go long without paying attention to what's actually going on. And that is that the market made a double top and is forming a lower high where you're clearly getting a hook somewhere here. We know this. And the reason for the person not being able to execute properly, this short, I mean, here, is because they are emotionally connected to this short. They are thinking, okay, I went down. Oh, it's not going down. And they start thinking, oh, look, there's some higher lows. And I'm going to, you know, attempt to long this market. So the solution I prepared for this is actually quite simple. It's switching your RSI to 2 from a 5. So I'll read this. The RSI is an important part of our trading system. Yet, like I said, today I'm going to show you how lowering your RSI from 5 to 2 can help you to not chase trades and actually grab those breakout trades as well at the same time. So when you apply this with price action, this is what I did in the ranges, and this is how I'm actually able to, Peter, be in a profit today, is because I shifted my RSI today to to a 2. So if we take a look at my chart like this, the 100-tick on the NASDAQ, you'll notice the RSI at 2, and you'll notice, you know, the hooks at 0.2. So the RSI is going to wiggle much more from up to down, much more than the hook indicator. But what this is going to help you to do is actually execute a trade in this criteria here, where you're not getting a hook at all. The RSI is actually going to twiggle and give you hooks where you can enter. Each time it drops below 50, it's giving you an opportunity to enter into these kind of environments. You guys had questions about this before, how I would do it. Here's a clear-cut solution of how to do it. RSI to 2, wait for the hook of the RSI below 50. In this example here, we have 1, 2, 3, 4. And I can show you many more of these examples where the market is trending nicely towards the upside and the hook's just sticking towards the upside, and you're not getting an opportunity to execute a long or a short. The RSI is going to wiggle between the 50 line, and of course it's overbought in the case of buying, and the 50 line thus giving you plenty of opportunities. So hopefully this will remove the FOMO and people execute here, rather they'll wait for a hook on the, you know, on the RSI to tick down. Ideally you want to have a pattern, but the solution for this is environments like this. Okay, so it's very simple. Try it out yourselves. Works pretty well. Sorry, just a sec. It works pretty well. I've used it a few times today to execute a trade, and specifically, I'm waiting for the 50 line to kick in. The second thing is to always have a pain point, and this is really important, because in this community we have people who are either way too aggressive or they're way too conservative. So I want to have a pain point for you guys. 5%, well, this is 10%, but 5% of 500 is 25. It's not a lot, right? Doesn't seem like a lot, but percentage-wise, 5% is hell. It's 5%. And that can turn dangerous for a person who doesn't understand that, if you start trading and, you think, oh, I'm just down 25 bucks, but, you got 500 in your account. It's actually, you're down 5%, a very fine line between double digits, So lose another 25, and you're down now 10%. Lose another 25, and you're down 15% in the example of the 500. So I want to have a pain point, and I want everyone, I really appreciate if everyone would have their own little pain point, something that would, control them throughout the day. This is something you should set for yourself. I would not go above 5% anywhere at any point. And what this means is that first, when you execute a trade, you should know, of course, your exit. That's pure and simple risk management from our side. Knowing your exit before you get in is vital. So having a direct exit point, a stop loss, a predetermined level that's not mental, that's actually set in stone with a stop loss is crucial. And the other thing is to manage your, to manage your exposure by not risking more, well, basically using position sizing. So that, like, let's say now, me per position, it's about 0.2% risk, right? So that's my risk per position right now, the way I'm trading. So 0.2, and I'm cool. That's more than enough for me on the account that I'm running. Knowing that, let's say if I increase my risk to 1%, if I hit 5 losers in a row, that's 5%, and that becomes a problem. That really becomes a problem. So I want you guys to have a pain point. I want you to have a predetermined value amount that you know of. You know it. You know that you have $650 on your account, or $6,500, or $16,500. Doesn't matter. You know that if that balance drops to X, it's done time. What you're doing is not working, and you need to stop, because if you continue to take those same actions, the only thing that's going to happen is you're just going to continue losing and losing and losing, and that's clearly going to be problematic. So start setting a pain point from the beginning, or cutoff point, call it whatever you want. Keep it between 1 and 5%. 1 and 5% is more than enough, and I think that's totally fair. So protect your accounts. So number one is I'm going to show you this here. This self-explanatory. You guys just have to make that commitment to know that, hey, this is my stopping point, and no matter what happens, I need to stop. You can set a rule combining this. Like if you hit that level, you don't trade. You come back in the next session, or the next day, or in a couple of hours. You refresh your mind, you review your trades. It's really important I would highly suggest you switch off your platform, because that urge will always be there to enter a trade. Always, 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 always. So you're going to be breaking that rule, and it's the same thing like breaking any other rule. You justify the breaking of it, and then you'll just continue to do it again and again and again. Quite simple. This I will show you live. We're going to go into the charts, and I'll show you this live. I'm going to go over a couple of more tips. Patterns are really, really important to know patterns, to understand them, and to follow them. So price action patterns are extremely vital to our trading success. Knowing them and seeking to find them is the job of a day trader. The only thing that fundamentals bring to us is volatility. That's why they matter. That's why we want to know when there is news. But we should never base our trades based on what we think might happen. So we should only, so we should only, my son brought me a burrito. We should only bring our attention into news events, earnings events, unemployment events, inflation events, and so forth. But we should let the chart guide us at absolutely all times, and we should only focus on trading what we see. Something I highly recommend for you guys to do is, if you look at my 1 minute line chart, I'd like to see you guys zoom in like this. So this is all I can see. This is all I can see on my, one second, I'll mute you guys. Okay. This is all I can see, and you can zoom even further and just pay attention to the recent levels, because right now, like if you were doing that, you would know, first of all, because when you were here, you could see a little bit back up here. You would see that there was a higher low, and then you see this thing here. This is the Nasdaq, just exactly what's happening right now. 1 sec. It allows you to see patterns better. Zooming in to this really helps. So here we have a higher low. This is our previous low, and you can see these highs are just leading to it, and we eventually break. What I'm looking to see here is something like this or like this, and then I would actually start seeking longs, because we are breaching this level here, and if we start getting higher lows, I will become very interested in executing longs on the Nasdaq. That's one point that helps you guys to see patterns better. The time-based patterns are good. The line chart is very effective, especially to guide us with price action. You guys can see quite a few good patterns, and I'm going to actually add a lot of them here. I'll spend some time tomorrow and add them. So we know the basic ones. This is a reversed head and shoulders, double tops, double bottoms, plus higher lows, which includes price action. But there is one pattern that's really important, and that's this one over here. And this is exactly what we saw today on the CPI data. I didn't trade it. I traded the opposite of it, thinking price action. Last 3 days, 3 lower highs, and I was thinking downside. But if you guys look at the Nasdaq today, you'll see this pattern here, a straight line resistance, and then higher lows leading to it. That's exactly what you will see on the Nasdaq today and on the DAX. And then you just see a massive breakout like this. Of course, I should have paid attention to this, but it's vital to know this pattern here. I see it very often, straight line resistance, or flip it upside down, straight line support and lower highs leading to it. So that's that's a secondary pattern that's really important and has a very high success and effectiveness rate. It works out very well majority of the time. Knowing that, here it is. So it's a straight line support, lower highs leading to it. Also, very important is we want to find patterns as close as possible to the VWAP, daily highs, daily lows. I'd say that right in those areas is where the success of these patterns becomes just so much more effective and stronger and more powerful. If anybody's looking at the NASDAQ 100 ticks, shift your RSI to 2. And even though your hook is not giving you an entry, the RSI is actually ticking at 50 right now for a long. If you guys have the time, check that out. There's still 20 transactions to go for this candle to wrap up. But this is the point of the RSI. It does help. Okay, the hook came down with it now because the candle's a bit bigger. But when there's smaller candles, what you're going to see is opportunities to actually execute trades using the RSI too. It does help. So yeah, know which patterns work best. I'm going to add all of these patterns, and eventually I'll make a PDF. In September, I'm going to work on a second course, and that's going to be just price action and technical analysis. I'll just go over that. No system, no nothing, just technical analysis and price action, explaining what matters with price action and what matters with patterns and so forth. Your guys' job while you're trading, and this will help you drastically, is to spend time while you're trading, to also look for patterns and not just pay attention to the basics of price action. Why? Because when you have a good pattern forming, the chances of you making a bigger profit on those patterns becomes pretty big. Meaning higher effectiveness of something working out. That's one. Number two, you get to size up on patterns. Connect the rest of the system. Price action, which is higher lows, lower highs, and of course, the ordinary hook. Let's go over this. Pro tip. So to find patterns and execute them flawlessly, you need to have FCA, which is focus, attention, concentration. If you cannot devote the necessary focus, concentration, and attention to your trading, you might as well stop wasting your time and money and come back when you can actually devote this. If you cannot devote attention to what's actually happening on that line chart, look at the line chart of the NASDAQ. It's trying to form a higher low. This is becoming a really good opportunity for an up move, right? And you can only take advantage of this if you are actually focused. Focus is the most important trading skill there is out there. It helps you to be consistent. It helps you to be disciplined. It helps you to apply your risk management. It helps you to control your exposure. It helps you to take profit earlier. Concentration is everything, so absolutely vital. Now, this is something that I pointed out in the community already, so follow the execution rules. Discipline is doing what needs to be done regardless of how you feel about it. The difference between a pro and an amateur is consistency, which is driven by discipline, and they're both connected through focus. Remembering as well that every one of us here is the only person responsible for our results, and we are in control to the levels of discipline, exposure, execution, and focus we add to the markets. We are the only ones responsible, no one else, just us. It's completely up to us. Tell me, guys, did you get the point about the RSI? Did everyone understand it well?
Yeah.
Peter, do you have any questions regarding that?
No, I've just listening to you, and I haven't had a chance to practice it yet.
You don't have to practice it much. You just have to check it out, and it's. I mean, when the market's moving and you're not getting a hook, you'll notice that the RSI will give you those little triggers, the same ones I just showed you guys on the previous move, where the 1 sec, I'll try to even go all the way back to that major move. I mean, that happened in seconds, so pointless to do it there.
So to clarify, when you put a line for RSI on 50,
yes,
and
on the
RSI you change it to 2 for the length. And then when it comes over 50 and then drops down below it, you short it. You can short it.
When it does a hook, around the 50 level. When it does a hook around the 50 level, that's it. I mean, I'll show you guys a guide. I'll make a guide for this. I'll add it to the course. I'll add that tomorrow. It's a very simple process. It actually works very well. So if the hook is stuck to one angle and you're not getting an opportunity to enter, let's say for longs in this case, when RSI is coming from plus 50 and comes towards 50 and gives you a hook, that is an indication to enter. You guys can also use that to actually build trades, which comes to the idea which I shared in the course as well, which is adding exposure without risk. If anyone remembers that lesson, maybe I didn't even upload it yet, I'm not sure. But adding exposure without risk is I buy at NASDAQ at 113, 350. And as price is going up, I get locked in with the algorithm, or in the case of Eric, I lock it in manually. I move my stop loss into profit. Using that RSI, you can actually find opportunities to build on your trade, meaning you get to add exposure without adding risk. So I started using compounding in 2016. That's when I developed that algorithm that I still use to this day. It actually helps a lot. And compounding, the way it works is, I'll switch to the whiteboard mode. 1 sec. I'll switch to the whiteboard mode and show you guys. Do you guys see? 1 sec. I'll stop the share and I'll restart it with the whiteboard. Here we go. Okay, so you guys see the whiteboard. So let's say the market, this is the market. We go long over here and price is starting to move in our favor, and it moves to a certain level. The way my algorithm works is with pips. So if I'm 30 points in profit, I mean, I set it to that. If I have 30 points in profit, it's going to execute another trade here. And what it's going to move is this trade has an SL. What it's going to do is it's moving this SL into profit to this level. So this trade is, let's say, 1 lot or 1 contract or whatever. And this next trade is going to be lower than that by 50%. So this one's going to be 0.5. Their SLs are going to be set at exactly the same level. And when the market moves another 30 points, it's going to open another trade, this time increasing the exposure by 50%, which means from the previous trade, 7.75. And it's going to move these stop losses into profit, both of them, to this level and set the stop loss of this trade at the exact same level. Meaning now I have 2 trades in profit, 1 lot and half a lot, and this one here. No matter what happens after this occurs, the first 2, you have a guaranteed profit no matter what. Funny story about this is I turned this on for testing when there was a flash crash of the yen, 2016 or 2015, I don't remember. And I took a very tiny sell trade. I had a $1,000 account and I took a 0.1 short position or 0.01, I don't remember. And I turned this thing on and the market dropped by 700 points. So you can imagine it just kept adding on and adding on, adding on, adding on, and moving the stop losses into profit constantly. So it's much easier with an algorithm, but you know, no harm done by you guys doing it by yourselves manually too, because it does help. It's the idea of adding exposure without adding risk. So when you believe you're in a trending market, that's the best time to do it. So each time the market, you know, does a little pullback and you have the valid criteria, you can add on to it as long as you're obeying the law of the numbers, which is not adding, like if your first position is, you know, 10, you know, the next one should be 5 and then 7.5 and then 10, and then you go positive, you know, 12.5 and then 15, and you start growing gradually with it. It's really good in trending markets. Of course, in a range, it's pointless. But it works very well in trending markets and can generate very, very good profits for you guys. Do you guys have any questions?
Yeah, regarding the patterns, you were saying like if they show up on the view app.
Yeah.
I'm looking at like a double top, and if you don't see the second top yet, but you can see it's forming a hook for that second top, can you just take it, or do you wait until it comes down and breaks the?
So let's say you're at the VWAP and you have the first top and you have the second one is already at the VWAP, or is it coming towards it?
It's like coming towards it.
Coming towards it. Well, if you have a valid hook, I would say, yeah, get in.
Okay.
Because it could be this pattern, you know, it could be a lower high at the VWAP. And that's also a good pattern. And I'll add all of these patterns. Like I said, I already started working on this. So I'm gonna add all of this information to this section here. I'm gonna clean this up and remove some of the things that are not needed, some older things like this here. We don't need this. So
okay. So otherwise you would only do this at VWAP and the daily low and daily high, like important levels? Or
no, I would size up at those levels.
Oh, you'd size up. Okay, so you could still do this like anywhere on the chart.
For sure.
Okay.
For sure.
Because I've been waiting till it breaks the what you call it, the lower high. But I find that I miss the move because I do that. So okay, so I'll start doing that then.
Yeah, do it, because I mean this pattern is really good, like something like this. I've seen this happen many times. You need to know that sometimes, you know, patterns, they just don't work out, and you know, that's totally normal. But the majority of the time it's going to work out. So if the hook's coming down already, like here, before the market hits a double top, feel free to execute, and of course, you know, try and keep your stop above this level here.
Okay, gotcha.
Anything else, guys? If you guys don't have anything else, I want to cut this session short, so I can eat, because I'm starving, literally starving. I didn't have lunch. I was stuck at the station all day. And then what I would like to do is those 4 points. What I'm going to do is make a blog post about them and release them out.
All right. Thank you, Dennis. Really appreciate it.
Awesome.
Super. But guys, I want to show you, actually leave it for now, but try to zoom in on your line chart. Zoom in a little bit more, okay? So you can see what's happening right now.
Yeah.
Because I tend to make some mistakes when I look to the past a little bit too much.
Yeah.
I see it from my side. I make some very silly mistakes, which starts to make me to think what could be happening. But when I zoom in, like I actually managed to grab that upside move while we're talking on the NASDAQ, just because I zoomed in and I noticed, you know, okay, we moved up, you know, we made a higher low, and I'm got the hook once, got the hook twice, got the hook 3 times, and I'm in a nice trade. So try to zoom in, okay? Not try, do it. Just zoom in, zoom in. I'll tell you how much I have mine. Mine's set to 40. 1 sec. 40%. I'm zoomed in 40%. But zoom in just to see what's happening right now. It's gonna help you lots.
Cheers, brother.
Super, guys. Sorry to make this short. I had a long day. I'm super tired. My eyes are burning and I'm absolutely starving. So that's a wrap for today. I'll see you guys again tomorrow.
Thanks.
Smart, lads.
Thanks.
You guys.
See you guys. Good night.
Bye-bye.
Bye.